Welcome back to Learn SKN. Today we have a MOB video for you. So we started looking at the business objectives. So that would be module 1, and we're looking at unit 1, module 1, and we're looking at the business objectives. And so last time we were able to look at the SMART, right? The SMART business objectives. And so today we're going to continue looking at the nature and role and importance of strategic and tactical and operational objectives. So we're still looking at objectives, but we're going to try and complete D in this video and then move on to the others. So if you're looking here in the textbook, we're looking at we looked at SMART last time, and so now we're going to be looking at the importance of objectives and then roll into the mission statement, vision statement, and the various strategic objectives. All right, so we're going to just roll with that just like that. Let me just get in here a little tighter. Yeah, okay, there we go. Okay, so importance of objectives. I mean, we know that. We can see why it is important to have objectives, but let's just read what they have here. The importance of objectives is outlined below. Objectives act as a guide for employees and the employer to follow in order to propel the business forward and thus attain its goal. So you have the objectives and you see them, they are laid out, and so these act as a guide for the employees and the employee to follow. So you know, okay, we have these objectives, 1, 2, 3 objectives. We have to start here, reach here. How are we going to get there? So it's a guide to say, okay, let's jump on objective 1A, 1B, then move on to objective 2, 2A, 2B. So we know what to do. They act as guardrails to guide us, so we stay on track, stay on course. And it kind of wraps up in the second one that says they give employees a sense of direction as to where the business is going. So it tells you as an employee, an employer, the guidelines, the guide as to how the business, where the business is going. And then it also gives you like on a personal level. When you have objectives, it tells us, it guides us. But then on a larger scale, when you're looking at a business on a whole, as an entity, they also give you a sense of direction. So even you might have a lot of objectives, if they are not SMART, but they still ain't really telling you where the business on a whole is going. And so the SMART objectives and proper objectives can tell you give you a sense of where the business is going as an entity. Objectives are also used as a tool to analyze the performance of the business and its employees over a period of time. So remember I said, you have objectives, you have to hit them, right? You're going towards those objectives. And so if you fail to achieve them, then you can look back and say, okay, we failed to achieve these objectives. Why? Why did we fail to achieve these particular objectives? And so we might be able to use them as a performance measuring stick to say, okay, we did not hit objective 1.5, we were up to 1.4, so we have to see how we can adjust and alter so that we can hit these objectives next time, right? Then they are important in the decision-making process as they provide a guide and framework for management to make decisions. They are used to help management to explore different courses of action or to try different business strategies. So you can use objectives to say, okay, we can hit 1, 2, 3, but then let's see what happens. And if that doesn't happen, we can say, okay, let's come back and try again. Let's try a different one, because whatever issues made us unable to hit these objectives, we have to now retool and come again. So it can help with decision-making process. If you realize that maybe one of the objectives might not have been timely enough or relevant to you, we're using SMART still, right? Or measurable, you might have to say, okay, let's come back and go again. Let's try again. Objectives function as a yardstick for tracking and organizing performance and progress. For example, Having an objective to reach a desired profit by year end will mean that the firm can track its monthly profit to ascertain whether it still is in line with the objective. And if you look at the video we did for the SMART, I mentioned something along that line, where you can, if you wanted to make, I think it was 200,000 in sales for that fiscal year, that corporate year. And so now we have to break that down into maybe quarters, so you can measure where am I at in quarter 1, quarter 2, quarter 3, so I can know if I'm on track to hit that particular target by the end of the fiscal year. So those are just some reasons why objectives are important. Objectives can also be used to set targets for individual departments as the firm aims to achieve its corporate objectives, right? So if you look at the larger scheme of things, you can set objectives for the various departments, but when they achieve those objectives, that would be a sum of the parts, right? If one department achieves theirs, the second one, the third, then together, the overall organization will be achieving its overall goal, right? So that's one way that objectives can be used to help the overall company reach its target through subsystems, through different departments. So those are some reasons why objectives are important. This is just FYI. And of course, we have different types of objectives. You have short term, medium term, long term. And so we don't have to dwell too much on this. It's pretty much self-explanatory. But what you have to know is that different time frames are different for different organizations. Some companies, their short term might be 2 years, 3 years. For some, short term might be a year, 18 months. Right? Long term for some might be 5. For others, it might be 10. They're based on the nature of the business. Companies like Boeing to manufacture planes. Because a plane takes so long to manufacture, of course, short-term objectives for them might be a year, 2 years, 3 years, that kind of thing. Right? Boeing to lock in orders years in advance because it takes a while to get these orders fulfilled. So you have to look at the different organizations and entities and know what these objectives, the time frames are different for you. But I mean, normally for a short term, we're talking about a year to 18 months. For long term, we might be looking at maybe 1, 2, 3 years. For long term, we're looking at 4 or 5 and above, right? So those are some different time frames with these objectives. So hierarchy of objectives. So naturally, in a business, you might have some objectives that are more important than others. All can't be the same. All can't be on the same level, right? Because some might be, let's say, a short term might be just, as they say, short term, and it might be lower on the hierarchy of objectives, but your more long-term objective might be higher because this is ultimately what the company wants to achieve. That's ultimately where you want to go. You want to be the number one in this particular field. That's not going to happen in a short run, in a short time. That takes time. And so that would be your top objective, the priority objective, the top one, to say, I want to be the best in this particular field by this particular time, 3, 4, 5 years. Like I say, you're going to come with people in that area, in that market, and so you can't just dominate the market one time, right? Unless you have something that's really special, right? So there's a hierarchy of objectives. Objectives can be broken down into different categories as seen in figure 2.1. We're going to look at that later on. As we ascend the hierarchy, the objectives become broader and more general. Right? Let's look at that right there. Here we go. These are the objectives. Right? They move from more specific to broader ones as it gets higher. At the pinnacle of the hierarchy is the business's aim. An aim or vision is where the business wants to go in the future, as I said before. It is a statement of purpose. So it gives you that purpose as to why we are doing what we are doing today because of where we want to reach tomorrow. For example, the business aims to expand its market share across the Caribbean. This vision of the firm is often broad, with very few specifics as to when it will be achieved. The vision gives an idea of the firm's plans for development and is also used as a tool for marketing, especially for potential investors. Of course, you're going to be boasting like, we aim to be the best in this particular thing. In this one here, they say we aim to expand across the Caribbean region. And of course, investors gonna hear that, and they'll be like, okay, I want in on this action early, so that by the time they invest and they expand for real, my returns would be maybe tenfold, right? The vision statement of the firm must be able to motivate workers by giving them drive to accomplish beyond what is happening at present. While the term goal and vision are sometimes used interchangeably, the vision outlines the firm's goal, which is said to be desired future outcome that the organization attempts to realize. The overall aim of the organization should form the firm's mission statement and objective. So we see that right there. The top is the aim and vision, the vision statement, right? It's basically what you really want the company to be ultimately in the long run. At the end of it all, this is what we want. We want to be the number one in this particular area. Let's look at some of these vision statements from some of these companies, like Google. Vision statement: to organize the world's information and make it universally accessible and useful. That's their vision. That's what they want to do ultimately. Organize all the information in the world and make it universally accessible and useful. Now you see something like that is broad, and that gives you something to work towards. So everything, when you in the staff meetings and things like that, you talk to your workers, say, look, this is where we want to be. We want to organize all of the world's information and make it accessible to many. That's a powerful statement you're going to try to do. TED, TED Talks, spread ideas, simple as that. That's their vision, spread ideas, simple vision statement. Tesla, to accelerate the world's transition to sustainable energy. Tesla, Elon Musk, they do the electric cars, but they also do batteries that you can, and they do solar panels for your house. So you can use those solar energy and the batteries to run your house off the grid, right? So these are just some of the famous vision statements. I just want to give you that link, right? LinkedIn, connect the world's professionals to make them more productive and successful, right? We're going to look at one more. Let's look at one more. Microsoft, to empower every person and every organization on the planet to achieve more. You see, that's a vision statement, and that's the ultimate goal of these particular companies. Okay, so that's the vision statement or the aim. The overall aim of the organization should form the firm's mission statement and objectives. So once you have the aim and the vision, then that should inform your mission statement. That would help you to formulate your mission statement. Mission statement, this is a statement which outlines the main aim of a business or company. A mission statement gives a clear outline of the business's aspirations and values. It enables all stakeholders, employees, managers, customers, and suppliers to understand the underlying reason for the action that are being taken by the particular business. While the firm's vision outlines where it hopes to be in the future, the mission statement usually says what the firm sets out to do during its operation. A good mission statement carries a number of elements which will give a clear indication of the strengths and effectiveness of such a mission. A well-written mission statement should give a clear indication of the purpose of the organization, outline the legitimacy of the organization, clearly describe the organization's value, objectives, or targets and reasons for existence. Be consumer focused, customer focused, and oriented, and at the same time catering to the needs of the employees and other stakeholders. Outline the products that are being offered and its desire to maintain these. State the firm's commitment to the fulfillment and satisfaction of customer needs. Signal how it will maintain a competitive edge over its rivals. So your mission statement has to be crucial, because this is what drives you beyond the vision. The mission is telling you how we plan to achieve this vision. So we have to really understand how important the mission statement is. It outlines the main, it informs, it tells you how we're going to accomplish that vision by outlining your purpose, outlining your objectives, outlining what you have to offer, right? So these are some of the things that should be a clear indication of the purpose of the organization, outline the legitimacy of the organization, clearly describe the organization's values, objectives, or target, and reasons for existence. So you would see that the mission statement is very crucial, and it helps to inform the aims or the vision statement for that particular organization. From the mission statement, the organization will construct objectives, which will clearly outline the plan of action that it will take in order to fulfill its overall mission. These objectives must be stated in a form that is measurable and attainable. That is, the management must be able to ascertain whether the firm is achieving them. Failure to achieve the lower level objectives usually result in failure to achieve the mission or vision. So these are the top of the hierarchy: mission aim, vision, sub aims, and the mission. Then you have your corporate objectives, strategic objectives, tactical objectives, and operational objectives that we're going to look at right now. So the next on the hierarchy pyramid, corporate objectives. Having established its vision and mission, it is essential for a business to develop its corporate objectives. These will give an understanding of how the business plans to achieve its vision and mission. Vision and mission statements are broad and general. Therefore, the corporate objectives help to narrow the focus. Corporate objectives can therefore be defined as specific, realistic, measurable aims which an organization plans to achieve within a given period of time. These objectives are usually written as long-term objectives with a time frame of 5 years or more. Both corporate and strategic objectives will be discussed below. So we're saying here that the corporate, so as you go down, you start getting more specific in terms of your objectives for the company. So the corporate objectives are developed, again, remember everything feeds into all of them. So this feeds into that, right? So the corporate objectives are there to kind of refine what the mission and vision are, right? Refine those. It can therefore be defined as a specific, realistic, and measurable, similar to what we discuss as SMART. Please note this right here, that the strategic objectives, corporate and strategic objectives, are often set by the top or senior management, the top dogs, the CEOs and them, right? They set these kind of objectives. So an example would be to increase profits by 40% in all divisions within the next 5 years. That's an example right there of one of those corporate objectives. To increase profits by 40% in all divisions within the next 5 years. So you see everything there, it's measurable. There's a time frame. It's specific. We're increasing profits. By how much? 40%. Where? All divisions. When? Next 5 years. Other corporate objectives could focus on maximizing sale revenue, growth or expansion, the expected return on investment, or even the firm's broader corporate social responsibilities. So you could even focus on maybe expanding, saying, okay, we're going to have 5 branches of our organization in the next 5 years. So you open maybe every year, open a different branch or something like that. So those are the corporate objectives right there coming to play. Then we have our strategic objectives here. Strategic objectives. Some firms do not have a separation of their corporate and strategic objectives. However, strategic objectives are usually medium to long term and relates to the outcomes that strengthen an organization's overall business position and competitive vitality. They refer to an organization's articulated aims or responses to address major changes, improvement, or competitiveness, and outline how the firm plans to accomplish its corporate objectives. Some examples of strategic objectives are to be ranked in the top 5 of the best hotel accommodation in a country in terms of market share by 3 years' time. To concentrate on innovation as the way to satisfy our customers in order to gain 20% increase in sales by 2 years' time. So those are the strategic objectives. So you are now positioning your company. You're putting them in a position to be more competitive, putting them to be above the rest. So this is where strategy comes into play. To be ranked in the top 5 of the best hotel accommodation in the country. See that strategy. You're looking at the ranking. You ain't saying number 1 just yet. Top 5. Because you know, when push comes to shove, people typing in looking for a hotel, you're gonna come up in the rankings. To concentrate on innovation as the way to satisfy our customers in order to gain 20% increase in sales by 2 years. Innovation. So you're looking at better ways to do the same thing. Better ways to solve certain problems. So now when you innovate, you become more competitive because that's an in-house thing now. And so that puts you head and shoulders above your competitors because you're innovating. You're doing something different, something unique. And that could give you a competitive edge that can help you gain that 20% increase in sales in 2 years. See, medium term, 2 years, as opposed to the vision, mission, and even the corporate strategy objectives that are a little more long term. Then we have the tactical objectives. Tactical objectives. Strategic objectives are sometimes called tactical objectives. They are a performance target established by the middle management department heads. Right, so note that these are from the middle management. The tactical objectives or the strategic objectives. Well, the tactical, right, for achieving specific organizational outcomes. They are plans designed to help execute the major strategic objectives and to accomplish a specific part of the organization's strategy. Tactical objectives are usually short to medium term, which the firm is expected to achieve within a year or close to a year. An example would be to improve productivity by 6% this year or to increase sales revenue by 10% for the financial year. So you see, that's a little bit more doable in the short term. To improve productivity, so maybe you might want to hire a new person in the short term. You might want to, get them more equipment, invest in capital to help them become more productive. So that's a more short-term objective, and that's more tactical in the sense that it helps you. You're being tactical in the sense that it helps you to more refine how you are going to achieve those larger objectives. What tactics, literal tactics, you're going to take to achieve those larger objectives. So improve productivity, buy new computers, buy new equipment, hire more staff, train the staff, etc., etc. That's the tactic you're going to use to achieve these objectives. And then we have the operational objectives. The last one on the pyramid, operational objectives, normally done by the lower management. So you see them, have them here. Senior for the strategic and corporate, middle for the tactical, and operational, we have the lower management. Short-term organizational objectives necessary to achieve longer-term tactical and strategic objectives. They are usually managed by lower level management, such as a supervisor, personnel who are concerned with immediate result. They are detailed, costed, and time plans of what the organization will do to meet each tactical or strategic objective. For example, an insurance company may have an objective to introduce at least 5 more clients to the business each month. Right? Simple enough, operational enough. Right? Maybe you might want to, in production, you might want to cut waste by, X amount. Or you might want to make 5 more units for the next week. Whatever. But this is about how you are conducting this particular business. Alright, so those are the objectives, the hierarchy of objectives that they ask us for here in the syllabus. Right? We look at the SMART objectives, the nature, the role, importance, strategic, tactical, and operational. And we also touch base on the mission and vision statements, the content and the importance of those 2 ideas. And so we're going to stay here for now. But if you want to see what happens next when you're looking at business objectives, like the video, subscribe to the channel, share the links, right? Get the video out, get the channel bigger, share the links for all the videos, share the links. Tell a friend, let it tell a friend, let it tell a friend. So we're gonna help to grow this community a little larger. So stay tuned for more. Thanks for watching. Thanks for listening.